Welcome back, everyone. We're diving deep today
Mm.
into the world of investment fraud. Really going to break it down, how to spot it, the different types, and some of the most notorious cases out there with all these, complex financial products and everyone wanting to get rich quick. It's more important than ever to know this stuff. Our guide for this deep dive is this in-depth report called Pasted Text. So ready to jump in?
Absolutely. Let's get into it.
All right. So first things first. What exactly is investment fraud?
Well, it really all comes down to deception, manipulating information to trick people into investing. Sometimes outright lies, misleading promises. Sometimes they just leave out, crucial facts. And you hit the nail on the head earlier. The bait is almost always those high returns with very little or no risk.
Yeah, that too good to be true thing.
Exactly. But what a lot of people don't realize is the impact it has on the victims. It's not just, financial ruin. It's the emotional trauma, the shattered trust. That can be truly devastating.
Right. It's not just about the money. It's about, people's lives being turned upside down. So I guess what I'm really curious about is, we hear about these schemes after they collapse.
Yeah.
But how do they manage to fool so many people, sometimes for years and years?
That's a really great question. One big factor is social proof. You see other people investing. Maybe people you trust, people you admire, and they seem to be profiting. It creates this sense of legitimacy, like, oh, this must be the real deal. And then there's FOMO, right? Fear of missing out.
Especially now with social media.
Oh, absolutely. Social media just amplifies everything. Scammers can easily create this image of success, use influencers to draw people in.
Like a modern day Keeping Up with the Joneses. But with much higher stakes.
So precisely. And then you've got confirmation bias. Once we buy into something, especially if we've already put money in, we tend to look for information that confirms our belief, even if there are, red flags staring us right in the face.
That's so true. We all want to believe we're making smart decisions.
Absolutely. And scammers know that. They prey on people's hopes and dreams, tell them exactly what they want to hear.
So it's a combination of factors, really. Psychology, social pressure, and this whole online ecosystem that makes it easier for these things to spread. All right, so now that we've kind of touched on the psychology, let's get into some of the most common types of investment fraud. Our source, Pasted Text, outlines several. And hopefully by understanding these tactics, our listeners can be better prepared to spot them.
Makes sense.
So let's start with a classic, the Ponzi scheme. We talked about Bernie Madoff earlier. His scheme was huge, obviously. But the principles are the same, even on a smaller scale, right?
Right. It's all about creating this illusion of profitability. They use money from new investors to pay off the older ones. It's like a house of cards. Eventually, it all collapses when the new money dries up.
And they can keep this facade going for so long. It's incredible. I guess in today's world, with everything so interconnected, what makes these schemes so difficult to detect?
Well, for one thing, financial products are just getting more and more complex. A lot of these Ponzi schemes are hidden within seemingly legitimate investments, so it's really hard for the average person to understand what's really going on. And then there's the trust factor. They often target specific communities or groups, people who already have those relationships and shared affinities. They gain trust and lower people's guard.
So it's not just about understanding finance, it's about understanding social dynamics too.
Exactly.
Okay, so let's move on to another type of fraud that preys on trust. Affinity fraud.
Right. This is where scammers go after specific communities. Could be religious groups, ethnic communities, professional organizations, you name it. They exploit those shared values and existing relationships to gain trust and credibility. They position themselves as insiders, offer exclusive investment opportunities, high returns, low risk, all that. And they really play on the victim's sense of belonging and loyalty.
Wow, that's awful. Taking advantage of people's good faith like that.
It is, and it's incredibly effective. When people think they're investing with someone they trust, someone who understands their culture or beliefs, their guard is down. They're more likely to overlook those red flags.
So it's about being aware of those biases and not letting our emotions cloud our judgment.
Absolutely.
Okay, so let's talk about something that can be a little confusing. The line between legitimate multi-level marketing, MLM, and pyramid schemes.
Yeah, that's a tricky one. True MLMs, they focus on selling products or services. People earn commissions on sales. That's the main thing. But when the focus shifts to recruitment, when the primary way to make money is by signing up new members, that's when it starts to look a lot like a pyramid scheme.
So it's about the structure of the business model. If it's all about recruiting and not about actual products. That's a big red flag.
Right. And those pyramid schemes are just not sustainable. They need an ever-expanding base of new recruits. Eventually, the market gets saturated, and the people at the bottom are left with losses and a bunch of unsold stuff.
Okay, let's move on to a type of fraud that's a little more insider.
Churning. Ah, yes, churning. This is when your broker, the person who's supposed to be managing your investments, trades excessively in your account, not to benefit you, but to generate commissions for themselves. It's a violation of their fiduciary duty, and it can cost the client a lot of money.
So we need to be aware of our broker's trading activity. If we see a lot of unnecessary trades, especially in those high commission products, that's a sign something might be wrong.
Exactly. It's also crucial to communicate with your broker. Be clear about your investment goals
Yeah.
and your risk tolerance. If their actions don't align with what you've told them, that's another sign that something might be off.
Oh, okay, good to know. So speaking of misaligned incentives, let's talk about fake investment opportunities.
Right. These are schemes that offer investments in things that don't even exist, non-existent assets or ventures, often promising those incredibly high returns with little or no risk. They might talk about high-yield bonds or exclusive real estate developments, cutting-edge technologies, all preying on people's desire to get rich quickly.
So again, it's that too good to be true thing.
Exactly. If it sounds too good to be true, it probably is. Always do your research, really dig into the investment, and watch out for those high-pressure sales tactics and promises of guaranteed returns.
Okay, great advice. And now we've got the rise of digital currencies, which means a whole new landscape of scams, Forex and cryptocurrency scams.
Oh, absolutely. These decentralized, often unregulated markets, they attract legitimate investors, of course, but also scammers looking to exploit the system. You see fake exchanges popping up all the time, promising huge returns on these obscure cryptocurrencies, and then they just vanish overnight, taking everyone's money with them.
So being extra cautious in the crypto world is key. Any advice for our listeners on how to protect themselves in this wild west of finance?
Well, first of all, do your research on any exchange or platform before you invest anything. Look for established platforms, ones with a proven track record, transparent fees, and strong security measures. Be wary of platforms that guarantee returns or pressure you into making quick decisions.
Okay, that makes sense. And security is paramount, I imagine.
Oh, absolutely. Strong, unique passwords for all your accounts. Two-factor authentication whenever possible. Watch out for phishing scams, where they try to trick you into giving them your login information or private keys. And always store your crypto in a secure wallet, preferably a hardware wallet that's not connected to the internet.
So it's really about being proactive and taking control of our own security.
Exactly. With crypto, there's no central authority to turn to if something goes wrong, so you have to be vigilant and protect yourself.
And it's not just the digital world, right? Even real estate, which seems like a tangible, secure investment, can be vulnerable to fraud. Pasted text talks about cases where people were tricked into investing in fake development projects or properties that didn't even exist.
Oh, yeah. Real estate scams are out there. They prey on that desire for tangible assets and the perception that real estate is safe and stable. But scammers are getting more sophisticated, creating these elaborate schemes with forged documents, fake websites, even staged property tours.
Wow, that's scary. So what are some red flags to look out for in real estate?
Well, one big one is a lack of transparency about the property or the development project. Always verify the legitimacy of the seller or developer. Do your research on the property, and watch out for those high-pressure sales tactics or promises of guaranteed returns. Again, if it seems too good to be true, it probably is.
Okay, so skepticism and due diligence are key.
Exactly. And don't be afraid to ask tough questions. Get independent legal advice before you commit to anything.
Great advice.
Yeah.
Now let's talk about a type of scam that often targets vulnerable individuals, boiler room schemes.
Right. These involve those high-pressure sales tactics to sell worthless or fraudulent investments. You've got these teams of aggressive salespeople, often working out of temporary locations. They use manipulative techniques, like creating a sense of urgency, to pressure people into making quick decisions. They might target the elderly or people who are new to investing, people who are maybe less experienced and feeling financially insecure.
So again, it's about being aware of those tactics and not letting ourselves be pressured into making rash decisions.
Exactly. Never invest in anything you don't fully understand. And don't let anyone rush you. If you feel pressured or uncomfortable, just walk away.
Good advice. And finally, let's talk about a type of fraud that's particularly egregious: investment advisor fraud.
This is where a financial advisor, someone who's supposed to be managing your money, and acting in your best interests. Instead, steers you towards investments that benefit them, not you. This could involve hitting fees, complex products that are hard to understand, or just outright misrepresenting the risks.
So it's about being aware of those potential conflicts of interest and making sure our advisor is truly on our side.
Exactly. Always look closely at the fees associated with any investment. Understand the risks involved. And don't be afraid to ask tough questions about your advisor's recommendations.
That's sound advice. It's unfortunate that we have to be so cautious, even when dealing with professionals who are supposed to be looking out for us.
You're right. But unfortunately, greed and self-interest can cloud even the most ethical compass.
Well, we've covered a lot of ground here. It's clear that investment fraud comes in many forms, and it can be difficult to spot, especially for those who are new to investing.
You're absolutely right. But knowledge is power. The more we know about the types of fraud, the tactics used by scammers, and the red flags to watch out for, the better equipped we are to protect ourselves.
I think that's a great point. We've laid the groundwork here, but there's so much more to explore. So after a quick break, we'll delve into some infamous cases of investment fraud that shook the world and the valuable lessons we can learn from them. Stay tuned. It's kind of crazy how some of these schemes can go undetected for so long. Really shows you the human element in all of this.
Yeah, for sure. It's not just about the numbers and regulations. It's about psychology, trust, and sometimes just plain wishful thinking.
Speaking of large-scale operations, let's get into some of the most infamous cases of investment fraud. Pasted text highlights a bunch, starting with one that really shook the whole global financial system, the Bernie Madoff Ponzi scheme.
Oh man, Madoff's scheme was just massive. He defrauded investors of like $65 billion over decades. And what's really wild is who he targeted. Sophisticated investors, charitable foundations, even celebrities. This wasn't some small-time operation. It was deeply entrenched in the financial elite.
It's almost unimaginable. The scale of the deception, the impact it had on so many lives. How could someone operate at that level for so long without anyone noticing?
That's the question everyone's been asking. Part of it was Madoff's reputation. He was well respected on Wall Street. It seemed like he built a successful career legitimately. He created this aura of exclusivity, like his fund was this privileged club only a select few could join. That, combined with those consistently high returns, no matter what the market was doing, it lulled investors into a false sense of security.
So reputation, exclusivity, and consistent returns created this illusion of invincibility.
Exactly. And it shows how important it is to look beyond the surface. Don't be blinded by reputation or success. Even the smartest investors can fall for these schemes if they're not careful.
That's a sobering thought. Okay, let's move on to another case that exposed the dark side of corporate greed, the Enron scandal.
Ah, Enron. Classic case of corporate malfeasance. The executives used accounting tricks and off-balance sheet partnerships to hide billions of dollars in debt. They artificially inflated their stock price, totally misleading investors. It was a house of cards built on deception and arrogance, and when it collapsed, it sent shockwaves through the market, wiped out billions in shareholder value, and really shook investor confidence in corporate America.
You know, thinking about Enron, I just feel angry. It's not just the financial losses, it's the betrayal of trust, the arrogance of those in power, the impact it had on employees, investors, the whole economy.
Yeah, it's a natural reaction. The Enron scandal was a wake-up call. For investors, regulators, the corporate world, it showed the need for greater transparency, accountability, ethical conduct.
Absolutely. It reminds us that even these seemingly rock-solid companies can be built on shaky foundations.
Okay, let's shift gears a bit. Talk about a case that really captured the public's imagination, the Wolf of Wall Street. Jordan Belfort and his Stratton Oakmont brokerage firm.
Ah, Belfort, a cautionary tale about those quick riches and the dark side of Wall Street. His firm engaged in rampant pump-and-dump schemes, manipulating stock prices, defrauding investors, all for personal gain. It was a culture of greed, excess, and disregard for the law.
I remember watching the movie. I was both fascinated and disgusted by Belfort's antics. It's a wild story for sure, but it makes you wonder, how did he get away with it for so long?
Well, part of it was the regulatory environment back then. The rules governing the stock market were looser, and enforcement wasn't as strict. But it was also Belfort's charisma. His manipulative skills, he created this culture of loyalty and complicity, surrounded himself with people willing to look the other way.
So regulatory loopholes, charismatic leadership, and a culture of greed allowed this scheme to thrive. Exactly. It's a reminder that even in a highly regulated industry like finance, there will always be people trying to exploit the system.
Okay, let's move on to a case that unfolded in the age of tech innovation, and it disrupted an industry that affects everyone, healthcare. I'm talking about Theranos, the company that promised to revolutionize blood testing.
Theranos is a fascinating case study. The dangers of hype, ambition, and unchecked ambition. Elizabeth Holmes, the founder, she captivated investors and the media with her vision of blood tests done with just a finger prick. But the technology never lived up to the hype. The company was built on fabricated results and misleading claims.
What strikes me about Theranos is the sheer audacity of the deception. Holmes fooled investors, scientists, even government regulators for years. It shows the power of belief, especially when it's fueled by the promise of groundbreaking technology.
You're right. Theranos also highlights the importance of skepticism and due diligence, especially when investing in companies claiming to disrupt industries. Don't just buy into a compelling narrative or a charismatic leader. Dig deeper, ask tough questions, demand evidence to back up the claims.
Yeah, sometimes the most compelling stories are the ones we need to scrutinize the most. Okay, let's wrap up our discussion of infamous cases with one that happened in the age of social media and influencer culture, the Fire Festival.
Fire Festival was a masterclass in social media manipulation and the dangers of FOMO, that fear of missing out. It was supposed to be this luxury music festival on a private island, an unforgettable experience with A-list performers, lavish accommodations. But in reality, it was a logistical nightmare. People stranded on a barren island, inadequate facilities, no music.
It's amazing how they created such a convincing illusion, using social media influencers and targeted marketing to generate all that hype and pre-sale tickets. It shows how appearances can be deceiving, especially online, where curated images and influencer endorsements can mask the truth.
Absolutely. Fire Festival is a cautionary tale about critical thinking, even when faced with these irresistible social media campaigns. Don't just follow the crowd. Do your research, question the claims, and be wary of anything that seems too good to be true.
Okay, so we've explored the psychology of investment fraud, looked at some infamous cases, and uncovered a whole range of tactics used by scammers. Now let's get practical. What can our listeners do to protect themselves and avoid becoming another victim?
It's been great, really insightful, and, it's important to remember that even though we've been talking about the dark side of finance, there are plenty of legitimate investment opportunities out there.
Right, for sure. We don't want to scare anyone off. It's about finding that balance
Mhm.
between being skeptical and being optimistic,
Mm,
but informed optimism.
yeah.
So for our listeners who want to grow their wealth responsibly, what are some final words of wisdom you can offer?
Well, I'd say the most important thing is to think long term. Don't get caught up in those get-rich-quick schemes or the idea of overnight riches. True financial security comes from making smart decisions, diversifying your investments, and being patient, writing out those market ups and downs.
Yeah, it's a marathon, not a sprint.
Yes, exactly.
Yeah.
And another thing, investing isn't just about numbers and returns. It's about aligning your finances with your values,
Hmm.
with your goals. What do you want your money to do for you, for your family? What kind of impact do you want to have?
It's about more than just the money itself. It's about what it represents, what it allows you to do.
Exactly. And don't be afraid to ask for help along the way. There are great financial advisors out there, websites, books, all sorts of resources to help you make those informed decisions.
Well, I think this has been a really eye-opening deep dive into the world of investment fraud and really just financial literacy in general. I hope our listeners feel more confident, more equipped to navigate this complex world.
I hope so too. Remember, knowledge is your best defense. Stay informed, stay vigilant, and keep learning.
Couldn't have said it better myself. Thanks for joining us on this journey. And remember, the power to protect your financial future is in your hands. Until next time.